And Wendy, you're on.
Hello, everyone, and welcome to Session 5 of Coldwell Banker's Virtual Education Expo. I'm Wendy Crane, Coldwell Banker's Vice President of Learning. You know, it's hard to believe that just 2 weeks ago today, we launched the first session in this series. Our goal at the time was to make sure that we were equipping our agents with the tools, the resources, and the knowledge they needed to carry on Coldwell Banker's 114-year-old tradition of being trusted advisors to our clients in times of uncertainty. However, just prior to launch, we realized this series was something we wanted to share beyond the walls of Coldwell Banker because we're all facing the same challenges right now, and the public needs us to be leaders. Leaders at work, leaders at home, and leaders in our communities. And that's why we put this series together, because we need to work together, we need to learn together, and together we'll get on the other side of this. So we opened it up to the entire real estate community, and in just 2 weeks, we have seen over 20,000 agents, managers, brokers, and owners come together to learn and to share. It has truly been remarkable. We cannot thank you enough for your encouragement and for your actions. We've been watching every day as you've been spreading the Coldwell Banker love using CB #GoodNews. And we've been listening to your feedback. We heard loud and clear that you wanted more Q&A. So we're going to do that for you today. We're going to stop at the halfway point and we'll stop at the end. And you can submit your questions as always by using the Q&A button in the upper right-hand corner of your screen. If your question does not get addressed live today, we will be answering them and posting them on our blog at blog.coldwellbanker.com along with the session recording and the materials. Now, we've had an overwhelming response and questions, so we're just asking for your patience as we work our hardest to get you the answers to the questions that you're looking for. And now, I'd like to put the spotlight on our agents, which is my favorite part of this series. We have Frank Obringer, Coldwell Banker Realty in Plano, Texas. He participated in a drive-up food pantry that fed 1,200 people in just 3 days. He also used social media to encourage his community to join in the efforts. That's definitely some good news. The Coldwell Banker Pacific Heights office shared the good news by recommending their favorite Netflix movies, because who is not looking for something new to watch on Netflix right now, right? Teresa Riggs from Coldwell Banker Home Source Apple Valley took our advice twice by trying something new and by practicing her virtual open house tours. Great job, Teresa. And Ghislaine Thompson of Coldwell Banker Realty in Texas helped make and deliver 100 masks for our first responders in her local community. In her words, "I have not been bored for 1 minute since starting on this sewing adventure. The best part is we can make a difference and help those who risk their lives to save ours." That is awesome. Thank you, Ghislaine. Today's topic, Cares What You Need to Know, is brought to you in collaboration by the studio and Coldwell Banker's learning team. And let's meet today's panelists. Today, we're going to be hearing from Ryan Gorman, the President and CEO of Coldwell Banker, Shannon McGann, the Senior Vice President of Government Affairs for NAR, and Sarah Young, who is the NAR Director of Real Estate Services and Policy Oversight. I know that I've been looking forward to this session from the minute that I found out that we were confirmed. And I know our agents, managers, and brokers are probably just as excited as I am to learn more about how the CARES Act can not only help us, but our clients as well. Thank you so much for carving out the time to be with us today. And now, on behalf of the studio and Coldwell Banker's learning team, welcome to 10 Things Every Agent Should Know About the CARES Act. Ryan, we're going to start with you. Can you just tell us exactly what the CARES Act is?
Certainly. Thank you, Wendy. Welcome, everyone. I'm thrilled that everyone has joined us, and especially thrilled that our partners at NAR have joined as well. They've been doing incredible work behind the scenes. We're going to hear a little bit about that today. The CARES Act is some of their handiwork on display. So the CARES Act is the abbreviated name for essentially the third major bill passed by Congress that has now been enacted into law that focuses on mostly stimulus. So there have been a lot in the last 3 bills focused on healthcare and sort of community health, as well as financial stimulus to ensure that there's financial health in the country as well. CARES Act is by far the largest. It is absolutely enormous. You've probably seen the headlines, more than $1 trillion. A lot is in it. Some of what you probably heard are things like the checks that will be direct deposited or mailed to everyone in America, Good reminder, if the IRS does not have your direct deposit information on account, please update it because your check could be substantially delayed if they do not have that. Those checks are going out directly to virtually everyone below certain income levels in the country. That's going to help tremendously. There's a lot more in there as well for supporting our banking institutions, our small businesses. Everything from logistics and healthcare is covered in that bill. Things that are especially germane to us in the real estate industry are some of the things we're going to cover today. Some are on the slide right now. The two biggest areas that have gotten a lot of focus are unemployment and some of the Small Business Administration loan program. On the unemployment side, obviously we know our industry is composed largely of entrepreneurs and independent contractor entrepreneurs as well. Independent contractors have not historically qualified for some of these programs, such as unemployment or underemployment relief at the state level, and for some of the Small Business Administration loans. Three of the things we're going to dig into a little bit here are some of the pandemic unemployment assistance, the PUA that you'll see there, that specifically qualifies independent contractors as allowing states to use the money the federal government is providing for independent contractors who apply. Now, the ultimate dispensation of those dollars is state level, and every state is trying to figure out how to handle this. They're all doing it a little bit differently, and they're all learning as they go. We'll get into what some of that means. The two loan programs, the EIDL and the PPP, have been available for a little while now. The PPP's independent contractor loans become available starting tomorrow. The EIDL has been available for a little while. You may have heard that referred to, a little bit of a misnomer, as the $10,000 grant. Both of those are loans, but there are some forgiveness provisions in there as well. In both cases, sole proprietor independent contractors with no payroll would not have historically been able to apply for and receive funds from that type of grant, but here they can, essentially using their net income as a proxy for payroll when doing some of the calculations for what they can apply. So much more on both of those. I strongly encourage everyone who's got detailed questions to check out the COVID-19 Hub or NAR's website, or your state or local associations, which have broken these things down into much more detail. But we're going to give some more overview of it here today to point you in the right direction.
Ryan, can you tell us what Coldwell Banker is doing to address the COVID-19 crisis and support its agents and brokers across the network?
Sure. Well, Wendy, you've highlighted some of it already. So even just sharing the good news, we do believe is part of our role, trying to encourage people to look on the bright side wherever we can, find the silver linings, and rise to the occasion. That's something that realtors world round have always done, and Coldwell Banker has symbolized for a long time. But this meeting today is a big part of it as well. So while we're here to support you, we're also here to inform you of who else is here to support you. That includes NAR. It also includes the federal government and state governments. We want to make sure that everyone is completely aware of all of the resources at their disposal, especially because right now, many of these things qualify in ways that you've been told for years you may not qualify. You do in a specific way, in a specific window today. We're trying to connect those dots. We've also been working behind the scenes locally at the city, county, state, and even federal level with NAR and others to ensure that those programs that are available through the government or through third-party lenders are taking specifically into account the real estate entrepreneur community.
Awesome. Thank you, Ryan. Shannon, this is for you. Number one, thank you so much for being here and for all the work that you and your team do. Can you tell us how NAR is advocating for realtors on Capitol Hill to ensure economic relief from the COVID-19 crisis?
Sure. Well, first off, I want to say thank you very much for having us here today. We are always excited to be able to explain directly what it is that the advocacy team is doing, and to shortly explain, we're doing it remotely. So I think, as Ryan mentioned, one of the very few little silver linings that have come out of this crisis is the ability to use technology in order to communicate around the country, and you're seeing that with members of Congress as well. So, for instance, just today, the Senate was hoping to put a bill to expand the Paycheck Protection Program by another $250 billion on the floor. They don't have the ability to get members into town and have a vote on it, so they have to see if they can do it by unanimous consent or voice vote. That requires that everybody, nobody is going to come and object, but it appears that they don't have the votes for that right now. So they're going to look again on Monday. But in the meantime, you see the Paycheck Protection Program is one of the most popular out there. Numbers I just got that on the 5th day of the program being open, so as of 5 o'clock last night, there are more than 400,000 applications totaling $107 billion. So it is always interesting when you see a government program that is designed to get money out the door and that it's working. And when we saw the application for the PPP program and it clocked in at about a page and a half, we thought, okay, they mean business. They mean that they really want to get this money out the door. So our goal is to ensure, as Ryan mentioned, that independent contractors, the self-employed, commission-based earners who are our realtor members are included in any and all aspects of these programs. And that wasn't just with CARES. That started with the Families First Act and including that FMLA expansion and paid leave and the unemployment assistance that was offered in that bill that would also include our members. So we do this like we do every other issue with our communication and with telling your story and with troubleshooting and giving that information to Capitol Hill. They want to be on our side. They're looking to help, and we provide all that information to get them there.
Awesome. Thank you so much. Sarah, can you tell us more about the ability of consumers to delay their loan payments and what the impact could have on their credit scores?
Sure. Thank you, Wendy, and thank you for having me. It's great to be able to talk to you today and about many of these important provisions that we hope that you familiarize yourself with. So forbearance for consumers. So Fannie Mae, Freddie Mac, FHA, and USDA Rural Housing are requiring lenders to offer borrowers 6 months of forbearance, which means delays on their loan payments for anyone whose income has been adversely affected by COVID-19. And if that is not enough, you may be eligible for an additional 6 months or a total of 360 days. Lenders are required to waive all late charges, fees, and penalties during the forbearance period. But please know, forbearance is not automatic. Individuals must contact their servicers to request this forbearance. And if you are approved, this would freeze payments during a specified period of time. You would then need to work out with your servicer how you will make up these missed payments. For example, requests could be made to have the missed payments extended onto your payment term, but you must work out those repayment terms with your servicer. Forbearance can be applied to mortgages on single-family properties that are owner-occupied, second homes, and investor properties. Multifamily property owners also can see some relief. Those who are current on their mortgage payments as of February 1st, 2020, and have federally insured, assisted, or supplemented loans may also request forbearance for 30 days due to financial hardship with an extension of up to 90 days. However, please know that multifamily owners that are receiving forbearance may not evict or charge late fees to tenants during that forbearance period. We're also getting a lot of questions about student loan debt. The CARES Act also provides 6 months of forbearance on federal student loans. For anyone who's worried about their credit scores during this time, the CARES Act also implemented provisions to protect credit scores from January 30th, 2020 through 120 days after enactment of the national emergency. So if customers are making payments or made arrangements to not make payments, customers must be reported as current. The Consumer Financial Protection Bureau has put out a great video online explaining the forbearance process, so I highly encourage you go to that video. If you go to www.consumerfinance.gov/coronavirus, they have the video online as well as other resources to understand better the forbearance process.
Awesome. Thank you, Sarah. Shannon, this one is for you. What is NAR doing to ensure real estate brokerage services are considered essential if states decide to issue stay-at-home orders? Shannon, you might be on mute.
The wonderful nature of working from home. I was muting you all to make sure you didn't hear my dog barking in the backyard and the kids running around. So
we get it.
But no, that is a great question and one of the issues that we hit early on. So, a stay-at-home order implies that you have a home to be in, and there are many transactions that occur on a daily basis where these types of transactions need to go through. And we immediately contacted, through our policy team, the Department of Homeland Security. They had these critical infrastructure guidance that they offer. This is a post-September 11th list of what types of businesses can and should stay open in case of a national emergency. So they had a very kind of a small or short list that initially came out that did not include any real estate services on that list, but did include some financial services. At the same time, a number of states, through their governors, were issuing different lists that may or may not have real estate on there. So Sarah and our team continue to talk to the Department of Homeland Security, and we talked to key folks on Capitol Hill. And in the second round of the list, we were able to secure residential and commercial real estate and settlement services as part of that list. Does that solve the problem? Not absolutely. So all of the governors can make their own determinations through state executive orders, and those can be amended at any point, and we're seeing that happen. So we highly recommend that you check with your state association on the current status of essential services designation within your state. And to make it even more complicated, local governments sometimes can impose their own additional restrictions, particularly in states that don't already have those statewide orders. So it's a patchwork. We were able to include that on the national level, but those are just guidelines. But we just encourage you to talk to your state association in order to find out what you need to do. More importantly, the guidance is to stay safe. And essential services does not mean that you have to do it. It means that you have the ability to do it. So if you think that you or your clients and customers are not safe, then that is a decision that you can make.
Awesome. Thank you so much, Sarah. Ryan, we're getting a lot of questions about the new SBA loan programs. How can a real estate agent apply for an SBA loan, and how long will it take for the SBA loan to be dispersed?
Sure, definitely getting a lot of questions about them, in part because the rules around them are not completely defined. So what's been allowed has been circulated, but what banks are ultimately approving and how they're doing it is a little bit confusing. First, it's important to know if you're deciding to actually apply for one of those loans, then be careful that you're not trying to also apply for the PUA or the unemployment benefit as well. So some of these things can work together, some do not. So you can't be looking to receive a loan if you're an independent contractor. You're applying with your own income as essentially your payroll for a loan qualification, and you're doing the PUA separately. So keeping those separated. On the loan program, the EIDL was already open for independent contractors. The PPP will be open tomorrow. There are a lot of similarities and some important differences between these two. So I suggest you go again on the Hub or NAR's website or Treasury's website. There's a lot of good materials to differentiate between the two. The important thing to remember is independent contractors do qualify as sole proprietors, and essentially you're using your net income. Think of this like your Schedule C net income on your tax forms every year at the federal level. That net income is essentially a proxy for the payroll if you are a sole proprietor independent contractor. So when you can follow the rules when you're filling this out, and you should be working with your lender to do so, but that's the rough proxy. And then some of the forgiveness that you receive will be related to those payments. They're capped, so essentially $100,000 a year is the cap. So divide that by 12, that's your monthly. Multiply that by 2.5, and that gets you into sort of how much you can apply for in the first place. But how much is forgiven, for instance, in the PPP, depends not just on that, but some other things as well, like rent or mortgage interest that you may be paying or utilities that you may be paying. The good news is, for instance, with the PPP, there is forgiveness there. Though I have heard that many lenders are indicating to independent contractors who are applying who did not previously establish a business account with the bank, so think of a business checking account as opposed to a personal checking account. Many lenders are saying, look, we're prioritizing our own business customers first, and you may or may not qualify. So it's important to be working with your lender. Another perhaps minor point in the bill, but it might be a major point for our independent contractors looking to apply for these loans, is there's some priority given to community-based lenders. So a lot of lessons learned from the Great Recession and a little more than a decade ago that Congress applied as they were formulating the CARES Act. Since that was a real estate-led recession, those lessons benefit us tremendously. Things like the forbearance that have already been discussed and the credit reporting that have already been discussed. Also, though, the impact of the Great Recession had on community-based lenders was really significant. So Congress has tried to prioritize them a little bit in several pieces of recent legislation. So if you're running into a dead end with your current bank, which may be a large bank, strongly encourage you to look to one of your community-based lenders and perhaps start a new relationship there, and they may be able to help you get a little bit more swiftly toward the funding. EIDL funds are coming in as little as 3 days. I've heard some come quicker than that. The PPP funding, it's not necessarily required that it gets out in 3 days, but there's certainly a huge priority in getting those funds into the public's hands sooner rather than later. So as quickly as they can, they'll be dispersing those funds.
Awesome. So as I promised, we were going to spend some more time with Q&A, and I'm sure we have lots of questions that are coming in. So I'm going to flip this one over to Jen, who is our producer, who's been watching the Q&A. Jen, what do we have for questions?
We do have quite a few questions that are state specific, and given the broad geography of our audience today, I'm not sure we can get into all of those, but do you all have any resources that you could provide for the audience on how to get their state specific unemployment benefits?
Yeah, so I'll just highlight that there are a lot of resources, but since the states are formulating these things really real time, especially for independent contractors, they in fact did not have systems set up. But those states that have chosen to participate in the PUA, which I haven't, perhaps our NAR colleagues have heard of some states that have declined. I have not heard of states that have declined. But if your state is participating with PUA, then the state unemployment website, which I think we have links in the COVID Hub to all of those websites, should be enumerating exactly how you apply and whether or not independent contractors are permitted to apply. Early on, there were some that were saying, we are eventually going to accept your application as an independent contractor, but right now we're not set up for it. So give us your email address and we will get back to you with the sort of rules of the road there. Most are catching up now, but really your state is going to be your absolute best resource. The state associations are oftentimes taking what they hear from the state and having some direct communications with the states, and then formulating those into FAQs and getting those out to their members really quickly. So I would argue that NAR's partnership with the state associations is probably one of the most productive partnerships right now in getting the right information into your hands at the state level.
Excellent. Yeah, thank you.
I would agree with Ryan. I just wanted to add one thing. If you go to www.dol.gov/general/location, you can find your state labor department or unemployment commission and find out if they are starting to implement these state programs or not.
Sarah, can you repeat that website again, please?
Sure. www.dol.gov/general/location.
Excellent. Everyone, also please keep in mind that in the resources that will be shared after we conclude today, we will have links to all of the different websites and information that we are talking about in today's presentation. So keep an eye out for that. Be sure to visit the blog and all of the COVID hubs, including what you'll find on nar.realtor.com, and you'll be able to access a lot of this extra information. All right, so another question. For the EIDL, if we get the up to $10,000 grant, then we get approved for the loan, can we decline the loan without having to pay back the grant? It was a pretty popular question.
Oh, popular. I'll take a shot at it and then maybe I could be corrected. How's that?
Okay.
So essentially those two loans, I mentioned some of the programs can be used together. Those two loans can be used together. However, cannot double dip. You cannot count the same, for instance, payroll or proxy for payroll in both and receive sort of twice as much. And you can't count the same expenses for forgiveness against both as well. So while they were designed so that one could be applied for EIDL and then PPP could augment that, they were not designed to be additive in terms of the final amount that you would actually be able to receive and then be forgiven. How did I do?
So I think that's an outstanding answer there. And I think we need to add that one onto our FAQ. That's a really good one. If you go to NAR's website at nar.realtor/coronavirus, there is an FAQ specifically on SBA loans. And it does talk about how you can receive up to $2 million in the Economic Injury Disaster Loan Program, but then you'd also be eligible for this $10,000 potential grant. And so it's not clear to me as to whether or not you could then turn down the loan if you've received the grant, but that's something that we will.
And in general, when choosing between $10,000 and $2 million, I would probably go for the $2 million. It does bring up a good point, though. We are advising everyone to make sure you're connecting with, for instance, a CPA who's familiar with your state rules in addition to the federal tax legislation, or perhaps a tax attorney, depending upon the complexity of your setup. That's always a good sort of general advice. Speak to an advisor. It could not be more crucial right now for you to definitely be connecting with CPA or a tax attorney to be able to help guide you through some of this, especially if the numbers that are being quoted are sort of in your realm of reason. When those dollars get bigger, definitely seek advice.
Also, kind of along the same veins, we have a lot of questions about independent contractors that have not filed with a specific registered trade name or LLC or operating companies, and how they would handle filing for any type of SBA assistance, whether or not they could possibly qualify.
I'm happy to take that one. We're getting a lot of questions, especially about specific financial institutions and whether or not they have a personal account or if they have a business account and their ability to qualify for the loan. The short answer is yes, because independent contractors and self-employed were included in the SBA plan that was actually written out commission-based earners in the legislation. They are applicable, but some financial institutions are requiring that you have had a business account with them prior or on February 15th. So you're seeing the president was asked about this at a press conference earlier this week. You just saw the Federal Reserve yesterday just try to relieve some of those regulations that are requiring people to have business customers vetted by February 15th. That is a regulatory and industry practice. It is not what is in the CARES Act, is my understanding, but we are working with the industry through the Bankers Association and others to make sure that they're opening it up. That's also one of the reasons the way we are advocating for an extension of these programs and more authorized funding. That opens up more to some of the smaller markets and community banks and credit unions who might not have had a big line out their door at the beginning, but we're hearing more and more that people are going to more of those independent institutions in order to access those funds.
Do we have time for one more question, or are we going to be moving forward?
I want to do one more. Let's just do one more, and then we'll continue with number 5.
All right. Next question, another one that's been upvoted quite a bit. If we apply for the PPP and EIDL loans, are we still eligible to apply for unemployment?
So my understanding, Shannon and Sarah, please chime in if I'm incorrect, but my understanding is essentially no if you are applying as an independent contractor, sole proprietor, using your income as essentially the payroll proxy. So now there are some caveats here. So for instance, if you're a broker owner and you have multiple employees and you essentially put yourself or a family member on furlough, then that individual, which might be you, also the owner, could potentially be applying for unemployment assistance. But for your business, you essentially cannot apply for both if you're an independent contractor, sole proprietor without separate payroll, because again, you'd be counting the same sort of income or lack of income twice when going to the government, whether it's the state or the federal government through a lender. You'd be counting the same number to determine what income you'd be able to receive. And the sort of general rule of thumb for these programs is you cannot double dip, you cannot double count. There have been a number of areas where in the initial bill passage phase, there were some folks who said, wow, I think I qualify for this now. And it sounded too good to be true. That's because it was not specifically enumerated in the legislation, but the general theory of don't double dip then precluded that. And Treasury then came out later and said, no, we of course did not mean this. We do intend for this to be a generous program and a timely program, but not to double count it.
And just to follow up on Ryan's answer, I just had a couple other things. So we actually asked the Department of Labor specifically to weigh in on this, and their recent advisories actually have not provided clarity, but we have been giving similar advice as to what Ryan just said, and that it's likely that state unemployment departments will want to know what other forms of income you're receiving or have requested, and that will likely be taken into consideration when they're calculating your benefits. But again, each state will need to make that determination. If we are able to get further clarification on that question, we'll make sure that we include it in our FAQs on our website.
Awesome, Sarah, we're going to stick with you. My next question's for you, actually. Can a real estate agent apply for unemployment? And if so, what documentation do they need? That's kind of what we just answered. But documentation-wise.
Yeah, I think we've already answered some of these questions. Just to kind of go back a little bit to make sure everyone understands what we're talking about. The CARES Act created a pandemic unemployment assistance program, And this is a new unemployment compensation program, and it's funded by the federal government, but it's administered by the states. So each state will have to enter this agreement with the federal government, and then they would make a determination as to how they're going to administer these benefits. And independent contractors and self-employed individuals are eligible for this program. So again, I had given you the URL to find out kind of what your state is doing to date and what forms that you need to fill out. I don't have a checklist for you as to what you would need to apply. That's something that you would need to get from your state because every state might be a little bit different.
Okay, awesome.
But one question that we are getting that I can try and answer is how will the amount of that unemployment benefit be determined? So self-employed individuals and independent contractors who are deemed eligible by their state for unemployment assistance under the CARES Act Pandemic Unemployment Assistance Program can receive up to 39 weeks of assistance through December 21st, 2020. So typically states will base this compensation amount, and Ryan sort of touched on this earlier, on net income from all self-employment income that was reported on an individual's most recent tax return. And then in addition to those weekly benefits, you will be eligible for an additional $600 a week through July 31st, 2020. So that's something that, to get those exact amounts and understand how you apply for that, you would need to speak to your state directly.
Thank you, Sarah. All right, Shannon, so Ryan, did you have something you wanted to add? I thought I heard.
Nope, all good. Very observant, but no, Wendy, all good.
Okay.
Oh, Wendy, I had one more thing on the unemployment that I just want to make sure I touched on because we get a lot of questions about this. But individuals have the ability to, quote, telework with pay or receive other paid leave or paid benefits are not eligible. But then what if you're teleworking and you're not really being paid because you can't close any transactions? Well, you may be eligible for unemployment compensation or potentially partial unemployment compensation. So even if you're teleworking, but you're not receiving the kind of income you're used to, I think you may still be eligible and you should apply.
Awesome. Thank you,
and
Sarah.
Actually, Wendy, just adding on to that, so I guess you intuited that I did have something to add. It is super important that you really do partner with someone to help you do this math here, because even what Sarah just walked through, the $600 weekly enhancement to the PUA with some underemployment that's not unemployment, when you actually do the math of that $600 lasts through the end of July, the unemployment can last until the end of the year, potentially, depending upon your circumstances. When you do the math on that versus EIDL versus PPP, there are timing differences, there are amount differences, and until you actually pencil it out yourself, you won't know what is in your best interest. There may be a program that is more overall dollars, but they're coming much later on, and you have a priority for dollars to come sooner rather than later, and the government may be agnostic between you applying between the two. You really got to pencil them out, and hopefully with a financial advisor.
You guys, this is such great information. I just can't thank you enough. I'm going to go ahead and move on over to Shannon. Shannon, if you can tell us a bit more about the cash payments that are being made not only to realtors, but to our clients as well.
Sure. So as we were looking at the process with the lawmakers, we had a shared goal. How do we ensure the health and safety of our realtor members while helping them get paid and stay in business during this crisis? So there are three main components to that. And the first is the cash flow. The second and third, as Ryan has covered, are the tax benefits and the loan and grant programs. But the cash flow includes unemployment assistance and those direct cash payments. So those are $1,200 per adult that will be sent to most adult Americans, with an additional $500 for each child. There was a period in this debate where some lawmakers were advocating for this to go to W-2 wage earners and not to 1099, and that's where we were there to quickly educate them on the fact that you're cutting out about half of the wage earners in this country, and more importantly, you're cutting out our members if you don't include 1099 receivers. And they quickly understood that and changed course, and so that was included in the CARES Act. So how do you get it is the funds will be directly deposited into your bank account using information from 2018 or 2019 income tax filings, considering most people, if you're like me, you haven't even thought about filing for 2019, and now we don't have to do that until July, so woohoo for that. So the checks will be mailed if you did not use direct deposit, and most recently we have heard reports that the IRS planned is to generate those electronic checks by April 9th. And then they could be deposited by as early as April 14th. Obviously, there are going to be others who it will lag if the records aren't correct, or there could be other issues, but their hope is to start getting those out the door very quickly.
Fantastic. Ryan, for those who are struggling with stay-in-place orders, what is your best advice right now for reaching out and connecting to your clients?
Sure. So following on to what Shannon just mentioned, some of what NAR's policy advocacy has done has not just been to educate Congress on independent contractors and the fact that they should not be thought of as separately from W-2 in terms of the necessity for this income to come their way, but also she mentioned earlier about the CISA or CISA rules around what is essential and what's not essential, and the fact that NAR also waded into that battle to make sure the government knows at every level how essential real estate services are. Though, of course, it doesn't mean that you need to be out there. It does mean that you can be helping people to get into homes. If you cannot be, or if you're restrained from doing so, or if hopefully you're staying home and abiding by these orders and doing everything you can to slow the spread. Everyone wants to get to the other side of this thing, but that means we all need to do our part to slow the spread. It doesn't mean you should fight your instinct that so many realtors have of helping the community. We're accustomed to doing that very much in person with one another, whether we're helping at a food bank or raising money with a local group or holding an event to raise money for a charity. In this case, though, you can be a great fulcrum for information for your community. What you do naturally, you're always out there talking to people. You can be doing that today too. Speaking with your existing clients, your potential future clients, members of your sphere, and just members of your broader community. Every time you're having one of those conversations, you're learning more about what's going on in the community, how people are feeling. You're hopefully spreading some of the positivity, helping people to de-stress a little bit just by having some of the conversations with you, knowing that they're all in this together. Attending events like this can give you some of the information you need. Then hold your own events like this, if you so choose, doing a Zoom call with your clients, etc. Help them understand things like the CARES Act. They've seen the headlines, they've maybe even heard some things that aren't true, perhaps on social media. You can help them dispel some of those myths, and that helps everyone to get into a better frame of mind. One of the biggest things we can do to help our business, our economy, and our community is to stay positive. If everyone starts understanding that the government is doing everything they can possibly do to throw every program they can possibly think of at this with financial stimulus and to try to slow the spread as well, that positivity then becomes self-reinforcing. What we need is good consumer sentiment. We need good individual and business sentiment for people to be able to look past COVID-19 and into our bright collective future together. You can be a part of that locally by spreading some of this information and by bringing some of your folks together, again, on Zoom calls or other things, to be able to help them understand what's going on, to feel overall better, less stressed by being more informed and more plugged in. It'll be good for your business long term, but near term, it'll be great for your community.
Awesome. Shannon, how do you recommend agents navigate this unique environment?
First of all, safely. Just as Brian mentioned, you have to put your safety first and that of your clients first. It's important also to understand that these are brand new government programs. Some have been created out of thin air in order to provide as much liquidity into the economy as possible. This is like spraying a fire hose onto the fire, just hope that this is going to work. And there are going to be areas where it may not work or where we're going to need to troubleshoot. So the more you can communicate with us as an advocacy team or with your local association and state association and with your leadership there at Coldwell Banker to let us know what problems you're facing or that your client is facing that we can address. If it's potentially through federal legislation, that's great. A lot of this is going to be with the regulatory agencies and just seeing where things can be clarified. Some of these may be legal issues that Katie Johnson, our general counsel, and her legal team have been doing an excellent job of finding out each and every one of these items and where that problem can be solved. But it's something that we're going to have to be patient. This is going to take a little while for this money to get into the economy, but it will get there. We are seeing some very positive progress out there. It's important also to remind everyone this is a health crisis. It is not a financial crisis, and it's certainly not a housing crisis. So this is something that we're working with lawmakers to educate them on the fact that real estate and the industry are going to be something that can help turn this economy around once this is over, and we're going to just keep our eye on the ball.
Awesome. Sarah, how do you recommend that agents share this information? Like Ryan had said, how should they share this with their clients?
So number one, I highly recommend you download all of NAR's FAQs on the resources that came out of the CARES Act. Again, if you go to nar.realtor.com/coronavirus, we have FAQs on the SBA loan program, on unemployment assistance, on the forbearance process, and that could be really helpful for you to inform clients that might not be aware of some of these services. For instance, if you don't need an SBA loan for yourself, maybe familiarize yourself with the process so that if you have a client that's struggling, you could be that trusted advisor. Similarly to the forbearance process, really understanding what that process looks like, how you can contact your lender and look for some relief on your loan payments. That could be really helpful to your clients. And lastly, I just want to ask you all to please be aware of scams. Unfortunately, during times of disaster, we see fraudsters come out and really take advantage of people. So, with the cash payments that Shannon was talking about, please know that the IRS will not email you for your Social Security number. If you get any of those emails, they are fraudulent. Make sure that your family members and your clients are aware. If you want a list of scams that we're seeing, you can go to that link on the CFPB's website that I was mentioning earlier. The Consumer Financial Protection Bureau has been tracking some of these scams, and please make yourself aware of them so you can warn your clients.
Awesome, Sarah. That is. Oh.
Sorry.
Yeah, go
Can
ahead.
you repeat that the link to the consumer website too, please?
Sure.
A lot of questions that are coming in on that.
Yeah, no, definitely. So if you go to consumerfinance.gov/coronavirus, and you might have to poke around the website a little bit, but you'll see the video that I mentioned on forbearance, and then you can click on COVID-19 scams. They've got a nice landing page for COVID-19 resources, so I highly recommend that you check that out.
And I'll add one to that, Wendy. Sorry, just on the scam front, because this unfortunately is happening to our Coldwell Banker agents every single day. I literally get multiple texts about it every single day. I will never ask you to go buy gift cards. So if you ever get a text from anyone that I am caught in a meeting and I'm asking you to go buy gift cards to help reward people in the community who are helping Coldwell Banker, et cetera, that is definitely a scam. So thank you for all of you who are flagging it. Unfortunately, some have fallen victim to it, but it is happening dozens of times a day throughout Coldwell Banker. I'm sure it's happening to other folks as well, but that's the most prevalent scam that's going on today. It's been going on for a few months, but they changed it and updated it to COVID-19, as I'm sure a lot of the other scams on the consumer finance website have been. They're old scams that have been updated for COVID-19, and people are a little more susceptible right now because so many things are different today, and they can sort of pull on some of those threads. But I'll never ask you to buy gift cards. I can, if I ever actually have a need to buy gift cards, I will find another way than to text you. But please ignore that.
Thank you, Ryan. Shannon, this question, next one is for you, and it's a two-part question. Will Congress consider additional economic relief packages in the next months, and what will NAR be advocating for future relief packages?
So yes, for the answer to the first question is yes, they are considering it even today. So even though Congress isn't expected back in Washington until April 20th at the earliest, and I would bet they don't come back then, congressional leadership and the president have been actively working on another iteration of the rescue package. So you may have seen about a week or so ago, there were conversations of a phase 4 infrastructure-based package that would include the FAST Act, which is the Highway Transportation Bill, as a potential base. Those conversations are still happening, and infrastructure is something that we care deeply about, and we've been engaged in that issue for the last year and a half. However, there are much more pressing concerns right now, and that includes what we mentioned earlier, the Paycheck Protection Act, and ensuring that we have a very robust line of funding for it. And my dog's barking again. I don't know what's going on. Sorry, guys. So as for that, we are looking at we're supportive of that additional funding that the Senate is looking at as early as today. That's the $250 billion. Since our independent contractors aren't eligible to apply for PPP until tomorrow, there's plenty of funding in the pipeline, but we want to make sure that that doesn't run out before the crisis is solved. So what makes realtors so effective on the Hill is not because we're representing a special interest. We're not. We're representing everyone's interest. So when we go to Capitol Hill, we're talking about our realtor members, property owners, consumers, and the industry and business as a whole. So the issues that we have been focused on over the last couple of weeks are ones we continue to focus on for phase 4 package. Top one being access to remote online notary. Currently, 23 states have it, but we need a federal minimum standard to ensure that the other states are able to process these transactions and people can close on their homes in the states that don't already have it. And we even need some clarification in the states that do. So we do have bipartisan legislation in both the House and the Senate, including a bill that was just dropped a week and a half ago in the House. So we're continuing to get co-sponsors for that. CARES was not in the scope of the CARES Act, so that wasn't going to be included there, but we are looking at that for phase 4. We're also pressing the Treasury Department on further tax extensions, including 1031 like-kind exchange and opportunity zones. And we're getting very positive feedback on that. They've been quite busy, so we are hopeful that this is something they will get to soon. And then we're also working with our industry partners and regulators and Congress on ensuring that the much needed forbearance measures that have been put into place already don't unintentionally lock up the mortgage marketplace and create a massive liquidity problem. So these are conversations that have been ongoing throughout this crisis, and where a great deal of action can happen through the regulators and through the industry as well. So those are some of our top priorities as we move forward.
Awesome. So Ryan, this one's for you. This is our 5th virtual education expo, and in nearly every expo, we get the same question over and over, and that is, how do I guide my clients when they say, let's hold off until this is all over? What is your best piece of advice for our agents when it comes to keeping their clients engaged in the buying and selling process?
Yeah, we definitely hear the question a lot, and I think if it makes sense to sell, if it made sense a month ago for you to sell because of what's happened in your life or an individual client, then it likely makes sense to sell today as well. The reason why we're such strong advocates of a robust marketing plan for a home is that you can really get market feedback on what the market is willing to pay for your home. So I strongly advocate that you not project or predict what the market may be, but you explore what the market may be. So getting your home ready and actually getting it listed perhaps today is some of the best advice you can get. Do not worry about predicting a price or trying to time the market. It's a bit of a fool's errand to do so. You will shortly know what the market may be willing to pay for your home. So again, if life circumstances were such that it made sense to sell or to buy, it likely still does, but it's also all that much more crucial that you partner with the right trusted advisor, the right realtor, to help you guide you through this process. We're, of course, creating tools and enabling processes in partnership with NAR and others to make sure that both the laws as well as the technology are there to allow transactions to continue in every market we can throughout the country. The concept of pegging this all over, this what, right? There are economic circumstances, there are health circumstances, kids are out of school, businesses are closed in some cases, partially open in others. It is unlikely you'll be able to perfectly predict when the ideal time would be. It's very likely that partnering with the right realtor and the right company to market your home robustly to the market, that you'll get feedback as to what the willingness to pay might be out there. So if you don't list it, it's not going to sell. List, explore, and then you'll get the right feedback from your advisor into how you move forward.
Awesome. Thank you, Ryan. And so we're going to spend the next 10 minutes, hopefully, taking our next Q&A. So Jen, let's just go ahead and dive right in.
All right, another big question from our audience. So if someone applies and does get awarded unemployment benefits, so as a real estate contractor, obviously the closing periods don't happen overnight. So what happens if they have a closing during the time period when they're receiving unemployment?
So I don't know if Sarah, you have some feedback on that. This is something that the states are actually trying to figure out as part of the independent contractor status. So under the classic unemployment scheme, you're either employed or not employed as a W-2 employee. And there may be some income that you receive, whether it's severance income or something else. States have processes to take that into account, take severance income into account when they're determining unemployment. What they don't have is this sort of iterative income approach that independent contractors often have, which is payments that are somewhat lumpy and come over time. So in many cases, they're trying to figure out how to do that, whether there be a state tax scheme that recovers some of that, or whether unemployment benefits would stop after a certain point. So I'm not sure if we've gotten some feedback from some states, Sarah, that have have specifically outlined how they'll be handling that. I know early on they recognized the problem, but didn't really have a solution, and they were inclined to more get checks flowing and then figure that out after the fact.
Yeah, I was just on a call earlier today with several general counsels of the large residential real estate firms, and we were all asking each other, have you seen any success stories yet out of states? And we really haven't. I think they're still in the process of putting these measures in place and trying to determine how they will handle this special unemployment assistance program that's geared toward independent contractors who traditionally have not applied for these benefits. So stay tuned. Hopefully we'll know more soon.
All right, well, a lot of our questions are along the same vein, so I'm going to go ahead and run with another similar one. So someone is receiving unemployment, are they expected to not show homes? Do they need to just kind of sit back, or should they continue to try and operate?
So I'll give you my feedback. Unless you've gotten specific instructions from the state at the time that you started to receive benefits under the PUA, under the unemployment scheme, then I would not stop activities that are likely to generate income from you. Again, unless it's for safety reasons or following a state order around real estate. There's not really an upside benefit to that. There's not, until there's tremendous clarity, which we're lacking to the point that's made earlier, around how these things will be treated. You should be optimizing your activities to generate as much income as possible, even if you are currently receiving benefits. Much easier for you to work with the state to cap or return or exhaust benefits than for you to go back after the fact and try and get retroactive payment for something, months later. So I would not completely stop. There are cases in which unemployment benefits have come under the traditional scheme, the sort of W-2 scheme, with specific instructions about what you can and cannot do to avoid jeopardizing that income stream. It's likely that states will craft and deliver those to you. It's unlikely that they will come at the exact same time that you start getting your first check. So I would not stop any income generating activities until you got clarity from the state.
So Ryan, this is Wendy. I'm just going to hop in on this one because those of you who were with us on our second session, we kind of pointed out the 100 days effect. And so if you don't have any business today, based off of what NAR is saying, not even counting the lead generation efforts, it would be potentially 100 days before you would see a commissions check. So I agree with Ryan, keep working, but it could take you a while. So thanks, Ryan. Jen, do we have another question? Because we've got time for sure.
We do. We have several. So another similar one, but also some different nuances to it. So if we have an agent that is operating and it's considered an essential service, so real estate is an essential service in their area, are they able to still apply for unemployment, and would they still qualify?
Yeah.
Yes.
Yeah. Yeah, that essential services designation in your state should not determine whether or not you would qualify for unemployment assistance. It really has to do with your own individual work situation and your own income situation.
And then a two-part question. Okay, so for those agents that have been in real estate for less than a year, okay, so they do not have a full year of 1099 income in order to try and match, or the agents that are part-time, how would either of these situations affect their eligibility?
So two different situations there. I will completely speculate here, so bear with me. In the first, someone who does not have sufficient income to be able to prove to the unemployment office, for instance, what their income should be, that the state would then be replacing. There are likely minimum floors to that. The states already have in existence due to separate W-2 income, so there may be a sort of minimum there. You may view it as insufficient or not matching the income that you're hoping to generate, but there likely is some level of floor there. In addition to that, there's an enhancement that was mentioned earlier, the $600 per week enhancement that lasts through the end of July, that puts an even higher potential floor under that. The part-time question, however, that's a little bit trickier, and there will be information on many of the state unemployment agency websites regarding that, because that would be most likely fall into the category of underemployment rather than unemployment, unless that part-time employment has also ended. For instance, you've been laid off or furloughed in some definitive way from that W-2 part-time employment. So it's a bit of a tricky situation there, but on the part-time side, there are likely resources and FAQs on the state unemployment website specific to, if I lost one of multiple jobs that I had, do I qualify for unemployment assistance?
All right, good answer. A lot of this information is state by state, so I just kind of want to remind our audience that we're doing the best we can in order to give you some resources in order to get a lot of those details. Another question having to do with unemployment. Say there is a substantial delay in when someone files for unemployment, but when they actually start receiving the benefits. Is it expected for any of the payments to be retroactive?
So all of these unemployment programs that exist for independent contractors are through the Pandemic Unemployment Assistance, and that's a contract through the Department of Labor and the state. So there can be specific eligibility requirements and administration efforts depending on how the state's programs currently work. And I'll let Sarah weigh in if there's any, if we have any examples of this. I know that I saw this on the chat box. There's Florida is having an especially tough time with getting the program up and running, and we have been in contact with our team in Florida, and our advocacy efforts are trying to ensure that is being such a large state and one where we have a huge number of members that they are going to have access to that program. So there's an overwhelming demand. There are clearly hiccups within the programming. Department of Labor has a lot of work to do and a lot more ahead of them in order to make sure these funds are getting out the door. But the intention of this is that if you can't access one of the other programs, and there are a lot of tax benefits that are out there as well, and if you can continue with a partnership or relationship that you have in the workplace and not have to be completely severed from that, that unemployment is if you are severed from other paychecks and other abilities to earn a living.
Yeah, I would just concur with Shannon. We have seen some states put out guidance, and I can send you a link to an infographic that I received from New York State, where they showed, how you would be eligible depending on whether or not you were an independent contractor or W-2 employee. And it was good. It had bubbles with lines. And then at the bottom, it had links to the state unemployment office. And then it had certain days that you could apply depending on your last name. So I think that was a unique way that a state was trying to manage some of the influx that they're getting in applications, so that hopefully that they can process them in a timely manner and you won't see the kind of delays that you're anticipating. So I really, again, it's state by state. Our state realtor associations are also starting to put out some infographics that I've seen that have been helpful for members to understand what they should apply for and when. So I'm thinking in the next week, we're going to start to see more and more resources that will be helpful to our members.
I think we can take one more question, Jen, and then we'll have to wrap it up.
All right. This one should hopefully be a pretty short answer. Deadlines. Are there any deadlines in place for applying for any of these benefits as of right now?
Well, they are for a limited amount of time. So the Pandemic Unemployment Assistance that provides that $600 supplemental assistance only goes through, I have the dates somewhere here. That only goes through July 31st, 2020. So if we're seeing the states have a really hard time implementing these programs in a timely fashion, it's possible that the federal government could delay those dates. I don't know, Shannon, if you've heard anything. I know that you've already talked about looking at supplementing the SBA loan program with an emergency supplemental. Has there been any talk about unemployment and pushing the dates if necessary?
That has not been in this round. This is the bill that they're looking at right now is simply $251 million or billion dollars more, the B, to go to PPP. It's a page and a half long piece of legislation. But yes, all of the programs, and especially more money to the states, are on the table for future consideration.
All right, thank you, everyone. I'm going to go ahead and start wrapping it up. I want to give a quick reminder to our agents that Operation Outreach will last through the entire month of April. Through Operation Outreach, Coldwell Banker agents are reaching out across the world and spreading kindness. They're setting daily goals to make contacts and finding accountability partners. We've got 100,000 agents across the globe, so we are hoping to touch a lot of lives with this initiative. You can find more information out about Operation Outreach by visiting the CBU Learning Center on the affiliate side, or Sales Pro on the company-owned side, and searching Operation Outreach. Our next Virtual Education Expo is Investing in You. It will be this coming Tuesday, April 14th at 2 p.m. Eastern Standard Time. We're going to be hearing from David Marine, who is the Chief Marketing Officer for Coldwell Banker, and Jan Loomis, who is the National Vice President of the Creative Studio at Coldwell Banker. David and Jan will be sharing strategies for building your brand. I hope that you will be able to join us. And I want to say a huge thank you once again. What an amazing session today. Ryan, Shannon, Sarah, so very valuable. Of course, want to thank the studio and marketing for your collaboration, all of our audience members for your participation today. And as a reminder, the recording, which has tons of valuable information and resources, will be posted on the blog. That's blog.coldwellbanker.com. In addition to our old expos or the previous expos that we've done, you can just search Education Expo to find that information. I'm Wendy Crane, encouraging you to stay inspired, keep spreading kindness, and never stop learning. We hope to see you next Tuesday at our next expo. Thanks, everyone.
Thank you.
Thank you, Wendy.
Thank you.